Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Andrew Cox, the CEO of Rio2, which trades on the TSXV under the symbol RIO. We initiated coverage on Rio2 last month with a buy rating and a $1.40 per share target price. Andrew, great to have you here today.
Yeah, hi Ben. Nice to see you again after the site visit. Looking forward to the interview.
Yes, it is. And that was a great trip. So, with all that said, I'm going to leave it to you to walk us through the presentation. If you don't mind pulling that up right now, I'll hop in if we have any questions, and then we can get into some Q&A after that.
Sure, just mention to the viewers that this presentation is available on the website, rio2.com, under the investors section. We're going to try and move through it pretty quickly today, so if anyone wants to go and look at it in more detail, it's available there, and you can also access the Verify platform where you can look at a 3D presentation of the geology through the construction. So just please have that in mind. Okay, Fenix Gold, Chile's next gold mine. This is the corporate presentation updated till April 2025. A quick view on the screen, you can see the plant construction at the end of March. So what is Fenix Gold? Fenix Gold is the largest permitted and fully financed gold heap leach project in the Americas, almost 5 million ounces in resources at a gold price of 1,800, as was demonstrated in our feasibility study 2023. It's also one of the largest gold oxide resources in the world, and Rio2 is attacking this project on a staged approach. We're currently talking about stage 1, the 20,000 tonne a day project, but we also have an expansion case that we're working towards as well, which will take the project to 80,000 tonnes per day. Fenix Gold is permitted and financed to construction, and we are working with a proven management team that comes from a company also known as Rio2 Mining, which was basically operating in Peru 2009, 2015, where we were able to construct and take to operation 2 run-of-mine heap leach projects similar to Fenix Gold. Those projects, La Reina was the first one put into operation in 2011, and then in 2014 we acquired Shawindo. That was put into operation in 2014 for 2015. So just important that I guess the viewers understand that we're coming from a history. We're a company that has built 2 mines before, similar heap leach run-of-mine projects to this, and this is our 3rd project. The leadership team, the board, the executive management, the management group below that are all people who have come from the Rio Alto experience, people that were involved at a corporate level or in the project level. So a lot of experience both in construction and operation here that we are now applying to the Fenix Gold project. Just mention that we are a very Latin company, in a lot of respects. All our professionals are Latin, mostly Peruvian, obviously, for the history that the company has come from. And in that sense, our office, the technical office, where our technical basis is in Lima, because our people were here anyway. Alex and myself both live in Lima, been here for 20 plus years. We do have a corporate presence in Canada, which is our CFO, Catherine Johnson. She works from home, and obviously the construction of the Fenix Gold project. So project financing, I don't want to delve into this too much, just say that the money was raised. It was a combination of equity from Rio, gold stream from 2021-22 with Wheaton, the second part of that deposit, and the flexible prepay arrangement that we were able to access with Wheaton Precious Metals, which leaves us fully funded towards construction. The breakdown of the Wheaton financing, again, please, this is on the website, so if you would like to review that in more detail, please do so. Just sets out that the $50 million stream initially that was negotiated with Wheaton, and then moves on to the flexible prepay arrangement that we have with them for $100 million and the terms and conditions of that. So the details there, just worth noting that in the case of the stream and the flexible prepay arrangement, 20% of the gold provided is returned to us at spot price. So it just has an impact on the numbers worth being aware of. Thanks. Our capital structure, currently about 426 million shares out. And I guess what we want to talk about on this graph was the rejection of the project back in 2022, mid-22. We suffered an EIA rejection despite having been through a very good technical process. The EIA was rejected with the change of government, and the group of people who came in to vote for the approval of the project had not been participants in the process. They were associated closely with the new government, and we basically were rejected on a negative vote by almost 11 out of 12 proponents. So unfortunate experience for us. That obviously took us 18 months to resolve. The process of ministerial appeal, you can see where the share price plummeted. And then once we were approved in December 23, share price starts climbing again. And this morning we're at $1.05 again, which is really nice to see as we're in construction. Some of the biggest shareholders at the bottom, again, I'm not going to go into that. It's there for you to look at in the presentation. So the stage 1 development, the 20,000 tonnes per day that we mentioned earlier, this is what we're currently building at the moment. The project is located in the Maricunga Gold Belt. It's a extremely well-endowed gold district in Chile. Currently, the only other operating mine is La Coipa, belonging to Kinross, which is just to the north of Fenix Gold. El Refugio or Maricunga, which is the other red cross to the south, another Kinross project it's in maintenance at the moment, care and maintenance, and other big Barrick Newmont projects like Caspici, Cerro Casale, Labomati, which is also Kinross. So there's a big group of projects in the area to be developed and waiting on development. Water is one of the issues, obviously, like Fenix Gold is facing to be able to take that to development. Just worth noting also on this map, please, the highway from Copiapó to the site, it's an international highway, CH31, which travels through to Argentina, crosses past Phoenix and carries on approximately another 100 kilometres to the border. So it's a good infrastructure. We're sited on very close to a main asphalted highway. So Phoenix is a massive outcropping oxide ore body, and you can see that in the slide. We're looking at a cross-section, or long section rather, through the pit northeast to southwest, where you can see that the mineralisation is exposed at surface in all three pits. The Fenix North, especially Fenix Central and Fenix South as well. So that's where we're starting mining, and that was what we liked when we saw this deposit. We had a very easy start, no pre-stripping, straight into good quantities of high-grade ore. And some of those red lines you can see on the surface are trenching samples, which show the continuity of the grade. It's not something that's difficult to mine. This is a bulk low-grade deposit in effect. So the blue line, the light blue line, you can see both in this section view and the plan view shows the pits that belong to the 20,000 tonne a day project. They're reserve pits calculated at 1650 gold, which are documented in the feasibility study 23. The black line underneath that, which is also shown on the plan view, is the resource pit shell of $1,800 gold, and that's the expansion case. That's what the Fenix pit becomes when we have access to water, which will enable us to process 80,000 tonne a day. Becomes a much bigger operation. We process 4 times more ore. We produce something like 300,000 ounces per year versus the current 100 we start with in the 20,000 tonne a day case. So that's the future of Fenix. Just moving on to the same numbers basically stated. The 20,000 tonne a day case, which is the reserve case, 1.8 million ounces, recovering about 1.3 at a 75% run of mine recovery. And the resource scenario where expanded case of 4.8, the 1.8 million ounces is a subset of that 4.8. We also have 1 million ounces inferred that we need to do some more drilling work to prove up and take them into an indicated category. So that's something that we'll be moving on with once we get into operation. Just mention that this is finally, as I said before, it's a bulk deposit. It's finely disseminated gold. It's very apt for leaching, with very little copper content, which is something rare in the Marikonga region. It's 100% oxides. We do not have a transition zone yet. The deepest hole is 600 meters and it's still in oxides. Okay, the feasibility study highlights, I guess, it was done at a gold price at $1,750, which is somewhat outdated today. Strip ratio, as I'm would like to point out, was in the 20,000 done a day cases only 0.85. It's a very low strip ratio. Helps us start the operation as well, keeps the costs down. Our gold grade average over the 17-year period is 0.48, and that we're estimating a gold recovery of 75% from raw material. In the initial years of operation, we have an artificial cutoff, so instead of cutting an economic cutoff was 0.24, we'll be working to 0.4. Everything above 0.4 goes to the leach pad. Anything below that and whatever we determine the cutoff to be will go to a stockpile. That allows us to start the operation at a head grade of 0.7 in the first year, and it drops to 0.65 second year, 0.6 third year. And by year 4, we go back to the average sort of grade of 0.48. So it's another way of bringing ounces forward, and allows us to achieve, after the ramp-up year of 70,000 ounces, we get to 100,000 ounces for 3 years before the grade drops back again.
Mm-hmm.
During the feasibility study, we demonstrated this all-in sustaining cost of $1,237 an ounce. Obviously, some costs have moved. Fuel hasn't moved. Labour's probably moved a little bit. But that number is still relatively okay in my mind, and there's a lot of upside with the new gold price put into their calculation. Our capital, and this is on top of the 30,000 we already spent back in 2022, was estimated at 116 to finish the project. The construction capital, and then following on life of mine, is another 77 million, which is basically related to pad construction. So ongoing, there's some other infrastructure that we bring on in year 2 and 3, like the workshop, but effectively mostly pad. We have a closure cost of 11 million, which is pretty typical of Chile. I mean, there's been no topsoil, no vegetation. It's basically a removal of infrastructure and closure of roads and dozing off of waste dumps and leach pads, etc. But it's a relatively simple exercise. So that gave us an MPV at the feasibility study level of 210. That's obviously outdated today, and there is a sensibility table which we'll get to. The IRR at that time was 28.5%. So the project here is the layout. You can see that to the right. I don't want to dwell on this too much. There's some really good verify shots where you can zoom in and spin it around and look at it from all different angles. The infrastructure of the project as well as the geology. I think that is more useful than me trying to talk through it, but just quickly, the pits are in pink. The 3 pits we mentioned and we saw in the cross section, long section. The leach pad is up to down the valley, to the north of us in orange, with the process plant and the PLS pond. The stockpiles I mentioned, where we have an artificial cutoff at the start of the project, are in green, and the waste dump in chocolate brown to the south of the pit. Okay, that's basically the operation, and as we saw before, the expanded pit encompasses all those 3 pink or 4 pink pits into one big elongated pit. The water supply for phase 1, this is something that we brought into the project to advance it, to take it forward. When we acquired the project in 2018, there was a PFS study, 2014, that envisaged the big operation with the 80,000 tonne a day, the crushing and everything, and we looked at it, and the problem was the water. There was no water available at that time for that project. So to take this forward, to fast track it, we went to the existing contract for a water supply with Awas Chanya. Back then, nowadays it's called Nueva Atacama. It's the same company, just a name change. And we nicked the project back to what we thought we could do with trucks. So the 20,000 tonne a day case is based around trucking. We plan to truck just close to 2,000 cubic metres of water per day to the project, which enables us to process the 20,000 tonne a day. So it's an trucking exercise of 160 kilometres, as you can see in the plan to the bottom, from Kopipo City up to site. It's equivalent to 72 trips per day. It's 3 trucks per hour, 24 hours a day. So yes, it's a logistic exercise. Yes, it's an expensive exercise. I think we estimated 23 point something dollars per cubic metre, but it enabled us to fast track the project into production and gives us time to work on the expanded case study, the pipeline study, and we'll touch on that a bit further down the presentation. So that's the current water situation. Mentioned that the road is a paved road. It's an international highway. Again, it's not a steep road with switchbacks. It's a big, long, gentle valley, probably driving up at 3 to 4% gradient. The last section from the highway to site, we have a 1 kilometre vertical lift to the plant site at 4,300 metres. And that road obviously will be constructed to all the gradients and standards that we require for the trucks to be able to get to site. The expanded case of the water basically is a desal solution to that. We can't envisage that groundwater as an option to us in Chile today. It's not being approved by environmental authorities, and all mining companies, I think, are looking to desal now as the future. In Kopipo, we have 2 options that exist today, where Awas and Nuevas, which is the parent company of Nueva Atacama, or the wastewater treatment plant that we're using, have desal plant with water supply in Kopipo, and they can increase capacity to supply more water as well. Awas CAP, the CAP group, they also have desal water in Kopipo. They supply mining operations, and they have the ability also to expand and deliver more water to new clients in the future. So we're currently talking to them. That's where we're going with the expanded case. We're also in conversations with Kinross about working together in a joint venture to build this pipeline. Kinross looking for water to some of their projects which they want to develop in the region as well. So there's a great synergy there for us to do something with them, and that's something we hope to firm up this year, and then to make a decision and start moving forward on engineering studies, environmental studies that we require to make that a reality. So the last option, Enerpac, an Israeli company called Solier, they are still in the EIA level. The study's in evaluation. It hasn't been finished yet, but that involves a brand new desal plant from the coast with an electrical solar powered system that would provide green energy for that water to be pumped. And it's a project that envisages 2 lines, distribution line to the north, distribution line to the east, supplying various third-party clients like mining, principally mining. But with the EIA still in approval, they're several years behind the other 2 options, which could put water into Kopipo within a year if required. Okay, quickly, the economic sensitivities. You can see the study was done in the cost model at $1,750 gold. Today at $3,000 per ounce, we're looking at something close to $1 billion NPV at 5%, and more potentially with the gold price increases that we're seeing. So we're pretty comfortable with all-in sustaining costs being not far off where it probably will be next year when we start operations, and where the gold price is at now. There's a very nice margin there. Some sensitivities below which you can check out in the presentation. Some similar operations in the world that Alex has found that are ROM, big bulk, low-grade ROM heap leach operations, being Marigold Mine in Nevada and Kinross's Ball Mountain also in Nevada. There's some similar numbers there, and I think what we're trying to show there is that Fenix could potentially be one of those projects with the water solution in place. We have a much better strip ratio, our grade is similar, recoveries are similar, and we have a resource that we can potentially take into production with the expanded case. So it's just a comparison to show people what Fenix could potentially be in the expanded case. Some photos at the end of March of construction, which is underway. We started construction in late October, very late October. We're now 5.5 months in. The platform we're looking at is the gold ADR plant. You can see the blue tanks, the ADR absorption tanks in the photo under the structure. There's obviously a lot of metal work in the roof for winter. We need to get that all boxed in and covered up so we can continue working through the winter inside there in comfortable conditions. To the right hand corner, you can see there's a big concrete circle in the bottom of the platform. That's the water reception tank for the water coming from the trucks. The platform up above that is the truck delivery platform where the trucks will come in, turn around, dump the water and leave again. This is a photo upstream and above the gold plant in the leach pad, phase 1 of the leach pad. We expect to deliver by the end of this month roughly 10 hectares of plastic. That's the phase 1. Then we stop. That's what we need to start. We will come back and continue leach pad construction after winter in probably September. So that'll be effectively done within the next few weeks. That photo is obviously out of date now, but so you can see the plastic being laid on the flank and it will cover the valley to the bottom. Our camp that was built back in 2022, there's a 530-man camp plus old infrastructure, which allows us to have another additional 150 people almost. That's currently in use. Today on site, we have almost 1,240 people involved in the project between the Fenix staff and our contractors, Stricon, doing the civils and the earthworks, and HLC, who are our processing plant constructors. So that things are very busy. The camp's full. We don't have much space at the moment. Some more photos just to give some perspective. The photo on the left just captures the edge of the ADR plant. You can see the steel framework there in the bottom of the photo. And what you're looking at to the left of that will be the barren solution pumping platform. You can see the PLS pond to the hard left. That's where the rich solution will come from the pad and be collected for processing or pumping to the plant. And then in the back of the photo, you can see the phase 1, 10 hectares of leach pad that we're currently expecting to deliver in the next couple of weeks. Okay, to the right, grade control drilling at Fenix South. That's where the mining starts. We start in Fenix South because it has good grades at surface. It has relatively easy topography to get started and develop space, so we can get platforms going very quickly. And we're closing up the drilling grid to 25 by 25 meters there, so we have a better control on the model when we start mining. And it'll also help us to be able to run another reconciliation against the geological model we have and check it with the new data to see how it gels up, which will be another interesting exercise. So basically, there's where we've come from, where we've been. The environmental study, all this started back in 2018. Geotechnical condemnation drilling, the ROM trial, feasibility study, EIA approval, permitting activities. That's where we had the rejection and then the reapproval again with the Committee of Ministers. And then project financing, which was completed late last year, October. Mine construction, which started at the same time, end of October. And in parallel to the mine construction, we are working here on the de-straw water strategy, the mine expansion study that's underway, and the mine expansion EIA environmental document, which we hope to submit in the next couple of years once we have all the information required to expand the project, separate to the water supply, which will come with its own EIA in the future. Thanks, Ben. That's it.
All right. Well, thank you, Andrew. That was a good, quick presentation, and I do have a couple follow-on questions. Yeah, I think you can stop sharing.
Yes, sorry, I'm just getting to that.
Yeah, so a couple other follow-on questions. One, you did skip out a little bit earlier on in the presentation when you spoke about the team. and how a lot of it is ex Rio Alto. So maybe you can just expand on that a little bit. Maybe talk about the performance of Rio Alto. I'm sure a lot of investors will already know, but for people that don't, it was a great success. So maybe you can just expand on that for a second.
Yeah, sure. So I joined Rio Alto in early 2011. I came on board with Strachan, who were the civil constructor, and came to site as alliance manager for the mining contract. Within probably 2 months of being there, I was operations manager for the project with Rio Alto. And there was a project that was put into operation. Construction was finished very fast. Operation happened very fast. The ramp up happened very fast. We were with up to 200,000 ounces in the first year, which was way ahead of schedule. So I guess the strategy of Rio has always been try and do it fast, do it cheap, and get the production happening as fast as you can. I think you can see that in what we're doing with the 20,000 tonne a day. We're using generators. We're not putting the power line in yet. We took the crushing out. Simple's good, and make it fast. Part of that strategy also relied on the Peruvian professionals we had and young people. We certainly had a young team of people, and they ran 30 years was the sort of average age of all the superintendents, and I think we had some good energy there, like a real best for project, which also worked. From the alliance point of view with our contractors, it's a different situation where everyone's involved together in taking the project forward, and it's not the client bashing the contractor or the contractor trying to sue the client for changes to plan or unknown information, etc. It's a strategy that works extremely well. We took that same strategy to Shawindo, so we sort of split half the team and put them into Shawindo, especially the construction people. And again, Shawindo's delivered $70 million on time, on budget, and produced gold when it was expected to. So it's something I guess we're proud of, and it's something that we've tried to hold on to. When Rio Alto was brought out by Tahoe Resources in 2015, and then basically Tahoe brought their own people in, and most of the people who had been with Rio Alto lost their jobs after that. So when Alex reformed the company in 2017, we tried to hang on and bring all those people back in and keep them together as a group, which we've done. And then now we're applying that same experience, the history that we have, also with the contractors, Strachan and HLC, both involved in La Arena Shawindo. So it's like the old. I mean, things haven't changed a lot in some respects, but we're doing it in Chile this time instead of Peru.
Yeah, well, and I think nowadays we're seeing companies that are good operators that are producing and producing well are the ones that are being rewarded in the market. And so, for investors to follow a team like yours, I think they can, have some faith in you guys being able to get this thing up and running on time and on budget. You'll be rewarded eventually in the marketplace, and you've already started to be.
Yeah,
So,
I hope
sorry.
so. And we'll release a press release in the next week or so detailing, where the construction's at the end of Q1 in terms of process progress and costs. And happy to say everything's on track at the moment.
Yeah, great. And that was actually going to lead into my next sort of questions. What can investors look for over the next couple quarters as you get closer to that start of production? Are you going to be updating them on progress? What are some key milestones that they can look for and see when?
Correct. The plan is that every quarter we will release. Unfortunately, it takes three weeks or so to get the cost report for that last month, and all the costs assigned to where they're supposed to be. But basically, every quarter before the end of the next month, we should be releasing a press release updating physical advances in the construction, plus the economic side of it, where the costs are at versus what was expected. And milestones, yep. Obviously getting the 10 hectares of leach pad finished and done. We'll just put that aside for winter, and we're ready to go with ore when we start mining. The PLS pond should be finished at the same time. In terms of the gold plant, it's getting the structure up. That's done. It's getting the covers, getting it all covered in. That's happening now while we're speaking. So we have a comfortable environment in winter for everyone to carry on working inside, all the electricals, the plumbing, the piping, the automation, all that detail work that will carry on through winter. And then when we come back into summer again in September, the plant guys will be carrying on with all the outside external stuff. But that's the biggest one, the plant. That's our critical timeline, is the plant. During winter, we're slowing down the earthworks, but we'll be working on the access road. We built it to a condition to make it usable to get up to site and with trucks and heavy stuff. But now we need to go back and do all the finishing on it and tidy up some of the areas. The access operational roads also happen over winter. So we'll be cutting the access road from Fenix South and the Fenix North, Fenix Central, all to link to the leach pad, ready for startup of operations, which we expect to hopefully start moving ore in October to the leach pad and start leaching in November. I guess the late November to be in condition to produce a bar in December is what we're internally aiming for. So,
and that's not far off.
No, it's happening very quickly.
And so I did go to site and you toured me around, and I did just want you to speak to maybe, and I was highly impressed by this, is just the way the operation's set up, the topography of where the location of the pits are relative to the pad, how the pad is
sure.
utilizing the
Probably
valley.
something I skipped a bit in the introduction, but I guess we should make everyone aware that the Fenix South, the Fenix mining pits, North, Central and South, are higher than the plant. Fenix North is the highest pit, it's just over 5,000 metres. Fenix Central is 4,995, so it's very close. I must say Ben was extremely good on his visit to altitude for someone who hadn't been that high before. He went very well. And then Fenix South is lower, it's down to about 4,600 in relation to the gold plant, which is at 4.3 down in the valley. Another reason why we're starting in Fenix South is also as well as the topography being easier, the haul profile is much easier coming through to the leach pad. And the gold plant 4,300. That's currently, I think that's good for us. We got that as low down the valley as we could. It's protected in the valley, and it's just a nicer place to be processing and working. Our camp at Lindsay, which you saw in the photos, is down at 3,200 metres. That's 20 kilometres away from the operation. It's it'll be a 30-minute drive when the road's finished.
Yeah, and I mean, I guess all of that aligns with the philosophy of building this mine quickly, getting it into production, getting some cash flows from that production, actually being able to take advantage of this $3,300 gold we're seeing today. And ultimately, the cash flow from that can self-fund the expansion project. And so just on the expansion study that you were speaking of, what is the timing for the study? Obviously contingent, it sounds like, on finding a more long-term water solution, but maybe you can talk through the different timelines of that.
Sure. So as you mentioned, get it going, start producing, and like Alex has always said, we need to execute, we need to deliver, we need to show people that this will work. I'm sure there's people that doubt. The trucking's not going to be easy. I have no illusions about that. But it's an operational thing. There's always solutions to operational problems. So get producing, demonstrate to the market that we can produce gold, that Fenix works, that the recoveries are what we expect them to be, and that that generates, as well as cash flow, it generates confidence. The expansion study underway now, the conceptual, going to basic engineering level for the expansion of the gold plant, waste dump, leach pads. Just mention while we're talking about that the project's layout has been designed in a way that all that space is available. That the leach pad space for the expand operation is upstream. We've left it upstream. We deliberately went down the valley far enough to make sure that we had space for the expanded case. The waste dump's just a simple downstream construction. There's a ton of space there as well, and the expanded pit doesn't interfere with any infrastructure. So that was all thought out ahead. That the ADR plant platform's also been built to accommodate 3 extra trains of absorption. So the study underway, as you mentioned, the critical path for that study is the water, CapEx or OpEx, and that's what we're working on with Kinross. I'd expect to have hopefully a conceptual study with costings completed by maybe, let's say, September. So then we feed that back into the study, and I think internally we're looking at late November to finish the study. So let's be safe and say December. Give us an extra month.
Yeah, well, and that's certainly something for investors to look forward to, albeit, that's when you're going to likely be starting to produce and
Yeah,
start to make
exactly.
some money. So, lots of, key catalysts coming over the next 6, 12 months for you guys. Um, I didn't have anything else for you, Andrew. I do appreciate you hopping on and taking the time. I will mention to investors, we are covering Rio2 with research, so we'll be providing our take on the different updates and press releases that Rio2 publishes over the next year here. And just 2 weeks ago, we updated investors on our site visit, so you'll be able to see some photos and things like that from the
Yeah,
visit itself. And so again, thank you, Andrew, for the time today and walking us through the presentation. And then lastly, just going back for the viewers, you can access all our research on our website at atriumresearch.ca and subscribe to our mailing list. Thanks again, Andrew.
yeah. No, thanks for the opportunity. This is generally Alex's space, so I'm treading on his toes a little bit here, but yeah, it's been
Yeah,
fun to do it and good to do it with you. So thanks, Ben.
great. Thanks for hopping on. Okay, take care.